Well, volatility is definitely back. So where should you be trading? Clifford Bennett, Chief Economist at ACY Securities, joins us now live to give us his favourite trades of the week. Clifford, always great to check in with you. Right, you've sat down at your trading screen. What's the number one trade at the top of your list? I know that you're liking gold at the moment.
Thank you, Cara. Hi, yes, but we will get to gold. I think right now, everyone, quick, jump on your computers and sell the Australian dollar. And I'm not allowed to say that, but there you go. The Australian dollar is sitting right on support now at 73.45. And it is one of those markets, there's a bit of an old salt in the market. There's the daily chart. You can see how we had that great Aussie dollar rally on the back of the record trade surplus numbers. But that trade surplus story was more about imports than it was about exports. Exports are about 5% higher than pre-COVID. Imports are about 10% lower. So the record trade surplus story, it's nice exports are stronger, but the trade surplus itself, that story was more a story about weak imports than it was about strong exports. So that's something to bear in mind. The Australian dollar has given up a lot of ground. It's been trying to recover from the sell-off of the last couple of days now, and it just isn't working. And across the board, actually, the US dollar looks like it's ready for a fresh spurt higher. So this whole move from that 70.70 type low, we nearly got our 70-cent target, that whole move from that 70.70 area low could well have just been a bounce in a much bigger bear market. So we're not going to get too excited, but just on the day, there's no doubt there's a lot of immediate selling to the downside on the Australian dollar. It's sort of breaking through 73.45 support almost immediately in the moment. If you were being a little bit conservative, you'd be watching 73.30. And we don't often talk about the immediate price action on your show, Cara, but I do think this is an important pivot point for the Australian dollar that people should pay attention to.
All right, so if I've just placed a sell then on the Australian dollar, 73.50-ish it is at the moment. Where would I be placing my stop and limit?
Okay, so we're not allowed to get into specifics, but so if it wasn't me, if it was Donald Duck or someone, I would probably say you have your stop loss at around 73.89 if you're aggressive, 75.15.25 if you're putting on a medium-term strategic position. But you could have a 73.89 stop. You could even be very aggressive at 69, but I just think you'd have to be on your screen, watching it, managing your risk closely. But it does look like there is momentum building here for a bit of a snap move lower. I'm not saying it's going to happen this time, but it has the exact look I've seen very often in markets where if this starts to snowball, and remember there'll be a lot of stop losses there, and if they start to snowball into each other, that's when you get one of those sort of 50 to 100 point quick moves. And then you would be short in a situation where there is a lot further potential downside on a medium-term basis. So it's worth consideration.
All right, well, the Australian dollar looks like it is in trouble. Clifford, let's move on to gold then and have a chat about it, because I know it's definitely one that you like. What key levels should we be looking out for?
Yeah, it's one that I like, and it's one that I've gotten wrong for the last few days. So we get some right, we get some wrong. At the moment, gold is being sold off as with other currencies and other commodities to a degree. So if you like, it's responding to the risk-off approach that's sort of hitting markets at the moment. And I think, though, it will find its feet somewhere around current levels. It could move another sort of $5 lower. If it moved any sort of through sort of, more than another $10 lower from where it is now, I think you'd have to be seriously worried about gold in the medium term. But my favorite trade on gold would be to buy here with a reasonably wide stop loss, because it is so smaller positions, wider stops are probably the way to trade gold at the moment if you're looking to establish a long position, because I think what we're going to see is a building sideways consolidation phase to the right there on the chart, of course, for a week or two. And then we will, with time, in a month to 2 to 3 months' time, we could be much, much higher with gold. And I wouldn't be surprised that we're on our way in a medium to long-term sense to $2,500.
And Clifford, I know that goes hand in hand with your oil trade as well.
Yes, it does. I think sell the black gold and buy the shiny stuff. So oil, I see, it's had a nice sort of big bounce period, but again, it's running out of steam. It's having a rally on the day to some degree. I think that's suspect. I think as the world investment community becomes increasingly aware that the global economy is actually slowing, and not just the United States and China. China's coming back to about normal. The United States, though, is looking a little bit like it's falling off a cliff economically, and everyone wants to look away. But that's what all the data is telling us. And it's all because of this Delta surge. It will mean further supply chain disruption. It will mean a slowing of global growth. And that will not be a positive black gold story. In other words, I think oil probably is near its peaks here on a big rebound. We've been bearish oil for a very long time, at least I have, and I think it has further downside.
All right, let's loop it back then to the currency markets. The euro in focus, of course, ECB later this evening. Weakness expected, do you think?
Yes, and I think that's probably one of the things that's swaying people to buy US dollars across the board on the afternoon, which is why the Aussie's under so much pressure. I think also there's going to be, there's been too high expectations on the reopening of the economy, and therefore both Australian stocks are being sold heavily and the currency, and that's no coincidence. So what I'm saying is the Australian dollar has its own story. Coming back to the euro, yes, I think people are worried the ECB will remain quite dovish. And it's only the ECB meeting will only confirm that the first out of the ECB and the Fed to raise rates will be eventually next year. I'm calling a Fed rate hike. And so that is a reason for positioning the way they are on the day. In a bigger sense, though, the big macro backdrop is that a lot of people in the world still see, they shouldn't, but they do, they still see the US dollar as a safe haven trade. So, as Delta surges around the world, people will be interested in moving or investing in the US dollar and the US stock market to some degree. And it's a US dollar strength story based on a safe haven process, plus US corporations repatriating funds back home because they're still uncertain about how all of this pandemic supply chain disruption process is going to unravel.
Clifford, are there any cross rates catching your eye at the moment?
Thank you, Karen. What a good question. Sterling Aussie. Sterling Aussie. I do like Sterling Aussie because if you're not sure which way the US dollar is going and you're long Sterling Aussie from here, it's had a bit of a sell-off. We've been bullish at it for a long time. It's had a bit of a sell-off. If you're long Sterling Aussie and the US dollar weakens, I think you're going to be losing a little. But if you're long Sterling Aussie and the US dollar appreciates, then this should be a very good trade. So what I'm trying to say is Sterling Aussie is a way of moderating risk on US dollar volatility while still maintaining a short short Australian dollar position. So moderating US dollar volatility, still being short Australian dollars, Sterling Aussie looks like a good trade to me.
Clifford, what type of trader are you? Are you an intraday trader or a long-term trader? When we see volatility like this, especially during the Asian session like we saw post RBA, are you keen to jump on those moves?
I'm a trend trader, but I do like when markets are suddenly dawning on markets that they're at the wrong price. And then you have to act very quickly. I mean, one of the best things I ever did was literally in the brokers, selling 10 million US, 10 million US, 10 million US, and the other side of the broker, the other side of the transaction was the Bank of Japan. So I was selling dollar yen. I was buying yen against the Bank of Japan, and we won. The Bank of Japan lost. Because once markets get a certain momentum and a certain realization that this is all wrong, the current valuation, there's little anyone can do to stop that freight train. People often think central banks can control currencies. No, they can't. So I think that situation is what we're going to see unfold in the Australian dollar. And if you're looking at the Australian dollar on the day, I'd really be noticing the sell-off in Australian stocks, because this could be a broad-based just sell Australia story based on we are in a recession. ACY is the first to call a recession. CBA, I believe, now is. Other banks are talking about the risk more. We called the recession very early. We never thought Q2 would be negative. We thought it would be positive, Q3, Q4, but we even think Q1 could be a negative growth number. So if that is dawning on the market, this is why Australian stocks and the Australian dollar are looking very vulnerable on the day.
Clifford, sounds good. Great to check in with you. Thanks so much as always for joining us on the trade.
Great afternoon.